It's time to take a look at the economic week ahead with Carmen Nel, who's an economist at RMB, and Nomvuyo Guma, Macroeconomic Strategist at Standard Bank as well. Carmen, thanks so much for joining us in studio. Good to have you on this end, right here in Johannesburg. It's a busy week ahead. We've got things kicking off with GDP numbers for the third quarter tomorrow, and broadly speaking, expectations are to see a halving of growth in South Africa over the quarter. Are you in line with consensus?
Yes, we are roughly in line with consensus. Our forecast is for 1.3. I think consensus is at 1.5. But as you highlight, it is a halving in growth. And that is largely due to the supply disruptions in the mining sector. So based on our estimates, it's the only sector we expect to have contracted in the third quarter.
Vuyo, are you expecting much the same?
US dollars have been?
Pretty similar. I mean, we're expecting a growth rate of about 1.7% in the quarter. We do believe that the tertiary sector probably had a much better performance in quarter three than it did in quarter two, and so we're a little bit to the top side of consensus, but certainly in line with the view that the mining sector will definitely have contracted, and in our view is likely to have shaved about 0.6 percentage points off of GDP. So the primary sector is likely to be the key drag on growth in the third quarter in our estimation.
So we've got a slightly more optimistic view coming through from Nomvuyo at Standard Bank. Carmen, if we're looking at the SARB leading indicator, though, that's set to give us an indication of where GDP is likely to be in 6 months' time. So what's that forecast looking like moving forward? Because it's very hard to look at these data points in terms of them being single data points on a quarter-on-quarter basis.
Yes, definitely. And one wishes one could actually give good news in terms of the leading indicator. Look, it's increased for the past the past two releases have shown positive month-on-month changes, but we expect it at best to stabilize. And also, if you look at the year-over-year momentum, that's running at merely 0.2. So it's not exactly painting a rosy picture. Quarter-on-quarter basis, it's actually contracting. So the leading indicator is telling you that growth could actually slow a bit or at best stabilize, and that's certainly in keeping with our view that, you know, we'll be lucky to get 2.5% growth next year. So it's not a massive pickup from this year.
Yeah, that's going to have big implications for tax revenue and the whole economic balance of the country, because a lot of the government spending assumptions have been made on a higher growth rate and higher tax revenues than it seems likely that we're going to get, which puts Mangaung Conference under the spotlight again. But we've got more stats coming out for you later in the week, credit and money supply numbers. What are you expecting there?
Well, definitely we're expecting these releases will probably be overshadowed by GDP, but for what it's worth, we are expecting an acceleration in both credit growth and in the PPI. Later on this week, we see credit growth having picked up slightly in the month, and as far as PPI is concerned, we've penciled in an increase of about 5% year on year. The September figure was unusually low, and in our view, you know, we're likely to see a pickup in PPI, largely stemming from the depreciation of the rand that we've already seen coming through.
It's exactly that inflation scenario, Carmen, that was in focus for the SARB last week when it came to interest rate decision. I mean, you know, while we have a growth picture that's deteriorating, waning, you've got this inflationary scenario that you've got to balance hand in hand.
Yes, definitely. I think you started to see the first signs of the SARB sort of upping the ante in terms of inflation worries, but if you listen to the whole statement, they're still very worried about growth, and in particular what's happening offshore. So we think they're still ready to ease rates, but as you highlight, the fact that inflation is rising, also that the rand is still relatively weak. I mean, it's still close to 9 versus the dollar, and that we think will keep the SARB on the sidelines until it's clear that inflation is going to stay in target, or we think there'll be a breach, but at least then it'll come back in target on which they'll be able to cut rates again. So I think at the moment the growth backdrop is still the dominant theme, but it's definitely the inflation picture which we think will actually negatively surprise over the next 6 months will be something to watch.
Just to follow on that point before we go back to Vuyo, the trade data come out on Friday, and we were talking earlier in the studio about money coming into the country and money going out, and of course the mining production has affected that. So that's another little bit of not good news coming.
Yes, and we have an outlier view in terms of the October trade release. We expect a deficit of about 20 billion rand, which would be the worst deficit on record. So October seasonally shows a deficit. I think the previous worst case scenario for October was about 14.9. I think the previous worst deficit for any month was around 17 billion rand, and we think this will hit 20 billion rand because of the supply disruptions in the mining sector filtering through. And then you've also got the global growth slowdown that we saw in the middle of the year, also impacting negatively in terms of the volume.
Nomvuyo, to what extent are you pricing in a case for the worst deficit on record?
We certainly don't think it'll be the worst deficit on record. We penciled in a deficit of about 11 billion. So, you know, historically, October has been quite a bad month as far as trade deficits are concerned. So it is likely to be yet another yawning trade deficit, but we certainly aren't expecting it to be the worst one on record.
Well, that's a small matter of 11 billion rand difference. It seems to me, Carmen, like a more important economic week than normal. You're coming to the end of the year, people are sort of pausing, and what gets sort of thought about and decided now kind of guides thoughts going through to the new year, because we stopped reporting on these things for a while. You've got that political conference coming up. I know it's not your brief to talk about that, but it does seem an unusually weighty week.
It is a weighty week, particularly given that you've got so many things impacting on the monetary policy decision-making process. So, as I mentioned, you know, growth is the dominant theme, but the rand is also now probably the primary risk to the inflation outlook. And if we are right and the deficit is massive, then obviously that makes the rand even more vulnerable at a time when you could be heading into an illiquid period for the exchange rate. Obviously, the global backdrop is as important. So, you know, today's meeting, you know, from Eurozone officials, you know, having to agree on something for Greece would help the rand in that regard. Obviously, the fiscal cliff is still looming, but we think that'll be resolved not quite at the 11th hour, but hopefully, you know, before
there'll be some drama, but they will resolve it, is what you say.
Yes. But it is an important week, and I think particularly if we can see the extent to which non-mining GDP is holding up, I think that'll be very important.
Nomvuyo, just to end off with you, to what extent are you focused on the political week ahead here in South Africa? Because it's critical for local politics as we've got the final ANC provincial conferences beginning.
Yes, absolutely. I mean, I do certainly think that it's going to be an important week on the political front, certainly something that we'll keep our eye on ahead of Mangaung. But I do think that at this point, you know, the data is most likely to take central stage, with the politics kind of playing a more central role as we get closer to the conference. I think a lot of regions have already declared their kind of key candidates, and already you're starting to see that jostling for position, you know, intensifying ahead of the conference. But I do think would kind of keep our our main attention on the GDP numbers for this week, with, you know, a kind of side eye leveled on the political scene.